Morning, Chris. How you doing?
Hey, good morning. I'm great. How are you?
Good, good. This is Brian Jones. I'm here with Chris Hood, professional options trader, world's most interesting man up in Canada.
Still got to get used to the marketing, man.
Yeah,
I don't know. The world's most interesting, probably world's most tired man today, man. Taking too much on the training side and not getting enough sleep. So
you don't give yourself enough credit, man. You've got, we're just talking about martial arts a little bit, talking about, so what about this war in Ukraine? What is this doing to, where do you see this going, like market wise?
I have no idea. You can't. It's really difficult because you sort of take this view that war must be bad, everything must go down, right? And we've been having these reversal days where we gap down and then we end up green. So it's a difficult thing. My heart breaks when I see this because no one should be in that position where they have to defend their country against some sort of psychopath. It's wrong. And I was saying to my wife, imagine you're a young father with two kids and you're not allowed to leave the country, but your kids and your wife can, and you've got to go and pick up arms. And I look at that president and I'm like, this guy is man of the year, man. There are very few global leaders that would be in the same category of, don't evacuate me out of here. I'm staying with my citizens and I'm going to fight for this. Seriously, kudos to him. And I wish there was something we could do. There's, you almost feel like you want to go and, fight with these guys. Having said that, you look at the market, you've got to be very, very careful not to apply any form of intellectual bias here. It's very easy to get wrapped up into the whole thing. This is it. The world's going to end. Armageddon, short everything. It's very, very easy to get into that mindset. So what I try and do is, one, I try not to hold any positions overnight. Number one, if I've got day trades, right? So I have got some positions that are slightly longer dated, but you try to minimize your portfolio risk that way. So try and put time on your side by going short in the short duration and not hold anything overnight. What we do see are these big gaps down, big gaps up, reversals, gap fills, etc. You've just got to stay completely, unbiased, man. You got to watch the signals. If you're not watching signals and you're watching CNN or you're watching any of these news shows, you're going to get it wrong. Like, you will get it wrong because the way in which the news is designed is to increase the anxiety of the situation. Right. So I'm not trying to underplay what's going on. There are websites. I saw one yesterday, which was crazy. I mean, these guys are basically geolocating Twitter feeds that are coming through. So where people take pictures of, what's happening, these guys can validate that it's real. They stick it on a map and you can see this whole map of Ukraine and where all the violence is happening or where the war stuff is happening. And it's horrible. Like, it's honestly horrible. So where's this going? I think if we take away the social thing, right, or the sort of morality of it, right? So I'm not judging anyone or anything.
Right. So just a dispassionate view of where you think this could go.
If you have to take a completely, off the side view, energy prices are going to get affected. All right. There's definitely the idea of higher oil prices because Russia is a major producer of oil. So with that, there's also the issue around natural gas. So the energy complex, let's just put it all into one group. I think that's going to be definitely the play to go into. You also have the impact of inflation. Now, there are two sides to this because the way I see it is often in war, central banks tend to provide liquidity because people are reacting in the sort of negative sense, right? So they want to create a sort of flow into the market. So there's definitely a case for more money to be printed. Okay, so you have to look at it that way. Give me a sec. Let me kill that buzzer. I've got a whole lot of triggers that are going to go off. So you've got that issue on the side. The second thing is you've got inflation in the US, which is going to be impacted negatively by higher oil prices, right? So you may see maybe a faster cycle of interest rate increases in the US, which is going to have a slightly dampening effect on the market as well. But having said all of that, I think it's all priced in. I think that at the end of the day, the market's already priced in interest rates because we know they're going to come. I think that the market's already priced in higher oil, and we're starting to see that, right? So when we start looking at these sort of geopolitical issues and we start taking a stance long or short, I wouldn't be either. I would try and trade. I've been trading this as a straddle because you don't really know. I can't tell. I mean, if anyone tells you where the market's going to go one day to the next, I think they're tossing a coin. And, I certainly can't tell. And no one has a crystal ball. Every day you wake up and you turn on the news, you don't know whether that psychopath is, hit the nuclear button or not, or whether he will. It's difficult to say. It's difficult to say. I think the sanctions that they've applied are brutal. They are extreme. And I think he's going to be a very unpopular person once the effects of those sanctions start to trickle down to the man on the street. I mean, some of the things that I was reading yesterday was that some of these soldiers, the Russian soldiers, didn't even know that they were going for an invasion. They thought it was drills, and they just abandoned some of their trucks that had these weapons on. I think in the north, there were some reports of these guys sort of running away from their trucks. And I don't think Putin calculated that the West was going to be this unified. I really don't think that. I think he's thought, when I went to Crimea, no one did anything, so they're not going to do anything now. And seeing how these oligarchs are getting affected and all of that, you have to think that there's someone in his inner circle that must be looking at this going, this guy's a nut job. We're going to have to do something, and it's only a matter of time, I think. That's my personal view. I think I was trying to think, like, what are the end game states that you would look at in a situation of war? It's not a war that he can win easily, okay? And the ace in the hand is China, because the more China sort of stands on the sideline watching, the reason I think that they're doing that is because of Taiwan. If they sanction Putin for going into the Ukraine, it takes off the Taiwan issue. They're not going to be able to go to Taiwan, right? And for the US, it's hard for them to commit to a war in Europe if the Chinese haven't started going into Taiwan, because they're going to have to fight two fronts to this, right? So, I don't know. I'm not a geopolitical expert. There are far cleverer people. I look at the signals that come out, and there's been a lot of chop. You're in and out, in and out, in and out. It's crazy. I think on one day, I think it was last week on Thursday, I ended up doing nearly 65 trades just on the signals.
You've been day trading. So you've been day trading quite a bit.
Yeah, it has been pretty volatile and pretty choppy. But, the thing at the end of the day is you can always decide to play, or you can sit on the side and watch. There's nothing wrong in just sitting on the side and waiting for the day where it's a little calmer or a little better. But, a lot of people look at this and go, oh, there's no opportunities in the market. There are tons of opportunities. The problem is most people are looking for opportunities that look in a particular way, that look the same as a strongly trending bull market like we've had for the last couple of years. They just look different today. And if you don't adjust your own thinking in terms of what those opportunities should look like, you will miss them completely. So again, it comes down to your tool set. If your tool sets are not adjustable to what's going on, you're going to land up on the wrong side. And then, then it creates a whole lot of problems. So definitely opportunities on the shorter time frame charts. Now's the time to have a very concentrated watch list. The two areas where I think there's opportunities are definitely energy and aerospace and the defense stocks. Tech is still going to struggle, and tech is not going to struggle because of the war. It's going to struggle because of interest rates. So you need to be a bit careful about going, buying the dip on Apple or, buying the dip on Microsoft kind of stuff. We did a position yesterday in the triple leveraged aerospace stocks. We have done positions in.
Is that the DFEN?
DFEN, yeah. It's actually quite an interesting one. I'll pull it up on the screen.
Does it, so it tracks, is it XAR? Is that right?
Yeah, it's the triple leverage of that.
Okay.
Yeah. So here in this is the 1 minute chart of the SPY, trading in the pre-market. Well, what I wanted to show was just how choppy yesterday was, right? So the key thing for me is always these volatility bands. And as soon as you see a red band appear, you need to be short. When a green band appears, you need to be long. Now, signals were pretty accurate yesterday in terms of getting us in and out safely out of trades. Now, when we go into DFEN and we look at it on a 1 hour chart, you'll see there was the signal. It's interesting when you start looking back and you go, oh, when was the right time to get into this? Look at how the signals were starting. This was on the 24th. This is a week ago, right? So 1 week ago, we got a signal to go into DFEN. What was the story with the war? A week ago, it hadn't started. The war's only been going for 6 days, right? That's nearly 7 days. So even before the war started, there were signals appearing that this was a trade worth getting into. And that was a buy signal at around 18. We're now up at 23. That's a pretty good trade. If it had been on the watch list, it just wasn't on the watch list. I missed that entry. But here you have a nice opportunity to enter. We had the divergent high, pulled the price back. We then got the divergent low here, and now it's going to push it up. Squeezes fired long, trend double green. This is if we could get above this line, which we will at the open, we're going to go into this zone here, and then we're going to break. We're going to probably chop around here and then get to this zone. So there's still a little bit of room to run here on DFEN. If you look at ERX, similar scenario. We've been trading ERX on the day chart back in December. We got in way early here. We got it down here. And energy had been on our watch list because of the talk of the interest rates from the Fed. So back in December,
what is the relationship historically between energy and in interest rates?
Well, when inflation starts going up, the central bank will start raising interest rates to keep money in the system to stop the price inflation, right? So always remember, inflation is not necessarily prices to the consumer kind of thing. It's more around how much money is printed, because if your GDP stays flat and you've got the same level of output, but you're increasing the supply of money, you create inflation because you've got to equal them out, right? Output must equal money supply in a way, because if you've got less output with more money, that means the goods that has to get sold is going to have a higher price tag because there's just more money, that's now floating into the system. So what happens with interest rates is, as interest rates start to rise and money stays in the system, you can't really say that, oh, well, energy prices need to go up because of interest rates. No, it's energy prices go up because there's more money chasing a finite supply. So as supply of oil starts to be affected, you're going to see the price start to rise. Now, what happened was a couple of days ago, you had Russia have their oil taken out of the system because no one can buy Russian oil now. But then Iran is coming online and making up the shortfall. So that's why we had this little blip. Everyone was like, oh, crap, the Russians are not going to supply us with oil. And it was, oh, gee whiz, we've got the Iranians coming in with more than what the Russians have taken out. And then everything starts to reverse. So I think we're going to be seeing oil above 100. I mean, I've got the futures here. In fact, here we are. We're above 100. We spiked up to 101. This is the futures on oil on the 1 minute chart. So when we start seeing rises in the oil price, we're going to be seeing this leveraged effect on efficient oil producers downstream, right? So CVX, for example, in my opinion, is one of the better oil companies. But not all oil companies are equal, right? So you've got, BP yesterday had to take a massive hit because they were forced to sell their holdings in Russia. So when you look at BP, that was their gap down yesterday. That was their disposal of that investment that they have in Russia. So not every oil stock is going to be treated the same in the coming months. So be careful about where you go. Do your homework carefully. Honestly, just stick with the ETF. It's a hell of a lot safer. XLE, ERX are great opportunities. I think that those would be more than just from a war perspective, but from an inflation long term. Those are nice areas to play in.
So you were mentioning yesterday on your Under the Hood webinar, I think someone asked a question about clean energy.
Yeah.
What do you think about clean energy as a potential
Oh,
move?
I like the idea. I just think the problem that comes in when you look at it long term is that it's vulnerable to shocks, right? So, you know, you have these spurts. I don't know if you remember a couple of years ago, we were trading TAN. In fact, it was TAN that we were trading on the day chart a couple of years ago. And, you know, you have these wild runs. It's prone to these really nice runs. And then, you know, what happens is it sort of falls off a cliff. And then when it falls off a cliff, it can be pretty painful. You know, here you can see it falling off a cliff, right? So you've got to be careful on anything, you know, here, if I drag this down, you know, this was up at 125, you know, dollars back in February of last year, and it's now down at 60. That's a pretty rough ride. Okay. So any form of theme, I try and stay away from it purely in the sense that, you know, sentiment can change pretty quickly. You know, it was like when everyone was saying Bitcoin was going to go to 100,000 and it was trading at 64, you know, everyone was leveraging up and going in, you know, because everyone was convinced it was going to happen. And then, you know, it doesn't. You know, here it was, oh, sorry, that's Bitcoin. Let's do this here, BT. Yeah, so when you look at Bitcoin, when it was trading up at 64,000 up here, you know, everyone was saying, oh, it's going to go, it's going to go. But it didn't, right? Let me just take these off for a sec. So this is when everyone was getting in. They were leveraging in because, oh wait, it was up here. Everyone was leveraging in because of this. And then it gets hammered. And then everyone says, no, it will come back. And then it gets hammered again. And you have to ask yourself, these kinds of, I don't want to use the word wrongly, and no offense to people who like Bitcoin or whatever. This is not I'm not criticizing anyone's choice of where they want to put their money. But faddish kind of trends, faddish kind of things, before they become pretty much mainstream, you've got to be careful. And I think green energy is like that. I think it's going to be a couple more years before it's a mainstream thing that can be without the kind of volatility that we're seeing. I love the idea of a short-term trade in it, though. Absolutely. I think that with higher oil prices, if that doesn't push people to legislate more changes that are going to cement green energy as the strategy for the future, then there's a missed opportunity. And hopefully, you know, I think in the US, you know, the more that you can legislate change in towards green energy type scenarios, the better. So I think it's a great idea.
I know that the U.S. government's putting a lot of initiatives in for green energy right now.
Yeah, I think it's a great idea. I think that there's some setups, but again, it comes down to how do you want to trade it. If you're telling me you're going to try and, you know, trade it on a short-term basis over the next couple of weeks, yep, there's probably some opportunities. If you want to trade it in the long run, you've got to be prepared for volatility. You know, you're not going to get the same. It's not the same trade, right? You have to look at it from that perspective first, decide what you want to do. If you want to trade it for the next 20 years, I think it's a phenomenal idea. If you want to trade it for the next week or so, I think you'll be better off in oil. I don't know. It's hard to say. It's hard to say, but I really enjoyed the question. And I did put it on my notes here to have a look at a trade today, potentially in it. You know, the one thing that you should also worry about with crypto, you have to determine which way you want to trade it. If you're buying to hold, you know, for the long haul, there's a lot of legal risks that you have to take into account. You know, actually physically buying Bitcoin kind of stuff. You know, trading a stock like Marathon, for example, or Riot, or any one of these mining firms, it's a completely different trade. You know, so it also depends on how you want to hold it. I mean, I trade crypto, but I trade it like a foreign currency, you know, you know, the same way that people trade the US dollar and the Canadian dollar. I trade crypto that way. And I do it with a robot. I don't do it myself. I just program something and let it do its thing. Very, very different from buying and holding Bitcoin. Like totally different way of looking at things. So just be careful about how, how committed you get to a particular thing. I always find that people find hills they want to die on, and especially in trading. It can be a pretty hard thing to realize that, is this really the hill that you want to take your life on? And
right.
I think you've got to become very agnostic to which opportunities you're willing to put money into. Because remember, at the end of the day, as a trader, my goal is to be profitable. I'm not trying to, push my opinion onto anything. I will trade anything, anywhere, anytime, as long as I can make money. When I invest and I buy for the long haul, very, very different. And I tend to do things much more inside the ETF space than I do on individual companies. I'd much rather just take my profits from trading and buy a ETF that pays a dividend, and not have to get into the ins and outs of fundamental analysis. I really don't enjoy it.
I think that a lot of people mistake investing and trading, or they mix the two up.
Absolutely.
At least a lot of the people that I know that play in the market, but they don't necessarily like read charts or anything. They just they try to trade based on fundamentals, and I don't know. It just doesn't.
I learned a very hard lesson, many years ago, that my opinion is irrelevant. No one gives a crap about what I think, and no one should give a crap about what I think. It's the same thing where you look at you put two guys with a very high academic qualification on stock analysis, and you tell them to value a company, and you'll have one company, two highly intelligent, skilled individuals telling you. One will say it's worth $100 a share. The other one will tell you it's worth $10 a share. Both of them have the same academic qualifications, but they have two opinions that are diametrically opposite. And what happens is, you, as the uneducated guy with money, has to make a choice as to who's right. And, sometimes it just doesn't make sense. I'm like, look, I don't care who's right. At the end of the day, if I can buy something for $10 and sell it for 12 and make 2, I'm going to take the 2 and put it into the market. And that's why passive ETF investing often just beats everyone hands down, because you don't have to take an opinion. I don't really care. If I get 8% and the market gives 8% and I get 8%, I'm okay with that. I didn't do worse than the market, kind of thing. So I don't know. It takes years to get to that level of sort of flippant. You can become a flippant guy when you've lost money before. And I've lost money before following fundamentals. I just don't buy it. My opinion doesn't matter. If I value something at $10 and some guy with bigger pockets says it's worth 3, I'm not going to win. That's the way it is. So it's a hard game. It's a hard game. Fundamental analysis is a hard game.
So what are you looking at this week? We've got
I've got a couple, right? I've got let me see. I'm looking at Marathon today. I think that there's a nice setup forming here. You can see this double bottom forming down here. This is the day chart. I was looking specifically at the hour chart. If we look here, I've already got some sell put signals coming up here from my tools. I'm looking to do a put credit spread for Friday. Maybe somewhere down here at the 23 levels. Market's going to open up. I don't know what price I'm going to put them in at, because with this opening up here, these pivot lines need to move up. So I need to see what the pricing is at the open, and I've possibly got something there. I like the look of SPX, to be honest. Cash settled index. I don't need to worry too much about being assigned. If we can get some upward movement in price, I really want to see SPX trading somewhere up here between 4463 and above 4388. So somewhere between 4400 and 4450. If we can get SPX into that zone here, selling a put spread for Friday somewhere down below, 43 with $100 gap could be an interesting play. Obviously, SPY translates as well. If you don't want to do something on SPX, it can be fairly expensive on a risk capital basis. SPY is cheaper. If I look at my list of potential opportunities, I really liked the look of this yesterday. This was my pick for yesterday, but I struggled. We had this gap up in the morning, We had a nice opportunity, if we didn't gap up, to sell a put spread somewhere down here, but there was just zero liquidity. It was, I put an order in, couldn't get filled. We've got something on NVIDIA for this week. We've already done the NVIDIA trade. It's in. We've got a put spread down here in this blue box. Here we're waiting for Friday, so that one should work.
These are all short-term trades. So
very,
yeah,
absolutely. If you're going to be trading anything, I would avoid trading on a Monday and a Friday. Okay, so don't let the weekend sort of thing get it to you. So if you're going to be doing anything on the put spread side, look for Friday's expiration, do it on a Tuesday. So today is a good day to add stuff for Friday. Make sure that you're using proper levels. Don't get seduced by huge premiums at the money. You can have one bad gap down and that doesn't get filled and you can suddenly lose all of your trades. Very, very short duration. Try and avoid the stocks that are monthly traded, trade the ones that are weekly. There are a couple of opportunities. I mean, Google had some as well. Here we have Google, we've got our sell put spread signal there. Our levels are a little tight compared to price. I would prefer Google to be trading over here, somewhere above 2,700. So we need to get it above. It's going to, for a $2,000 stock to be down $6 at the open, it's irrelevant. It's
so
marginal.
what time frame are you looking at now?
This is the hourly. I'll usually do my put spreads for same week expiration of the hourly chart. And I will try and look for levels below these support lines, right? So once I get below these support lines, you start losing a lot of premium, right? So the further away I am from the money, the less money I'm going to make, which means I'm going to be risking slightly more than I'm going to be making, right? I usually like doing the 1-for-1 put spreads 21 days out, hoping for momentum to push me up. The problem is momentum is so hard to read when you've got external events that are driving the market in each direction. So avoid that. Rather establish a higher probability trade by going deep out of the money on your put spreads. If you're going to be selling call spreads, be very careful, because call spreads, what you risk is this reversal. All right. So if you had been selling call spreads somewhere down here, it's these massive and fast reversals that happen that kill your trade. So be very, very careful selling call spreads when the market's been gapping down, because those reversals to the upside tend to wipe out your position.
Google's good. Are you looking at you're looking at the 25-15 delta kind of things?
Pretty much. The 25-15 delta put spreads for 4 days to expiration tend to have a 70 to 80% probability. Those are okay to sort of to skew the risk a little against you. I don't want to be in a situation where on Friday my price is trading close to the short strike. I don't want to be there, because I don't want to be assigned. So the idea on these kinds of trades is full on theta erosion. I'm not trying to trade it for anything other than, even if the stock stays flat, I'm going to still win on the trade. So there are some opportunities. They just don't look the same. Be careful about looking for things. It's like having Christmas and someone changed the wrapping paper and your name is still on the box. It doesn't mean it's not your present. You can still go and take it. It just doesn't look the same. My wife always tells me that my metaphors are horrible. She's like, your metaphors suck. So I need to improve on that one.
That one's pretty good. I like that one.
Just make sure, in volatile times, you've got to make sure that you've got indicators and signals that work for you, right? So, your volatility bands, for us, the volatility band in volatile times is the key. All right. There is no doubt that I don't believe there is a better trend-based signal than our volatility band, because when it changes color, it shifts in that direction.
Now, the volatility bands are part of which tool that you use?
They are part of the MA trading tool, and I have them as a separation. So if I just turn that off and put that back on, there you can see it a bit more clearly. When it goes from gray to green, you start seeing the trend starting to shift. Green to gray, that's your exit. So a lot of times these are the easy trades, it just following the colors. And never take a bullish trade in a bearish trend. As long as you follow the fundamental rules, it will keep you safe on the trades. So MA tool, it's available in the squeeze tool. as a calculator, right? So in the squeeze tool, when we switch to it, let me turn on the squeeze tool. When we switch to the squeeze tool, it doesn't show visibly on your chart, but it's part of your calculations. So when we usually, a lot of guys use both tools at the same time. You can see here on Google, using the 1 hour chart, using our baselines, look at all these clusters of long signals that we got here. Now, they're not particularly strong in terms of win rates. Let me just turn this down. We don't have a huge amount of win rate, but our amplitude is fairly reliable. So here you could see on that signal where we had our sell put spread. Now that comes from a different set of data. Our squeeze tool telling us at the same time, if you had sold a put spread on that signal, you've already cleared it for profit. It's already done. So often what happens is your signals should tie into your watch list, right? So if you don't have your watch list in play and you're not watching this stuff, I don't usually have a watch list that I look at on an hourly basis. I use it on a daily. You'll miss this stuff. You'll always see it after the fact. It's like, damn, should have done it. That's why we keep our lists as simple as possible. And, being able to go through, here, Apple on the hourly, is there an opportunity to sell something on Apple? Yes, we have a squeeze signal here, fairly decent win rate, nice amplitude. Anything above 1.2 for an amplitude profit factor is a decent number. Here, what we're looking for is for Apple to get just above the 165 level, and we can short a put spread somewhere here on this green line or down here at the bottom of the volatility band for Friday. That would be the trade that we would be looking for. BHP, we were looking to do something. There was our trigger. It was below the trend line. So we were looking for it to be above the trend line, which it's now above the trend line. We can look to sell put spreads at these levels here. Let's see, Playboy. Here you've got the switch. There was our trigger on selling puts. If you took the trigger there on the hourly chart, sold the blue line, you're up. You would have already extracted it. Now, can we do a trade here? Yes, but we need to be above this level. So if Playboy gets above 1604 on the hourly, we could sell anything here on this blue box, right? So the blue box is what I'm looking to trade. I just want the yellow candle to be above that red line. And then we're there. Tesla, similar scenario here. There was our trigger. We just needed to start moving there. Divergent low. We know price will rise after a white candle. So we're getting a higher bar. Squeeze is losing a bit of momentum. There was our trigger. So you can often see when you start learning how to interpret signals, you'll see the accuracy that comes in when you start merging some of these tools together. And it really, really helps. So, often I say to subscribers that get the tools is for a couple of days, just sit with the tool, watching a real-time chart. Here, if you turn this on to a sort of 15-second candle, you'll see these printing in real time, right? So here we're using a slightly different signal using a 5-minute range. Now you'll see there was our long trigger. We have a white candle, higher prices, blue candle, higher prices, white candle. Now you'll see black candle, lower price. There it was. Watch the signal. So it will change. There's our trend line. As long as it's green, in a green band, and we've got a bullish signal, we can trade it to the upside. That would have been a profit-taking trade. So you would have gone long here, taken profits, and literally you just sit and watch this, and you'll see how the candles will print as the signals are happening in real time. So it allows you to get comfortable with the speed at which signals print, because that's something that really takes people by surprise. They want fast signals, but sometimes fast isn't better. So watching them print and then change the time frames to 15 minutes or 5 minutes does make life a lot easier. But you've got to be comfortable with what your signals are saying. And a lot of people don't do that. They don't practice the reading of signals. So it makes their trading a little bit patchy. It makes it a little bit choppy. You can create your own volatility just by, these signals, they printed too many. Well, change the time frame. So here you have a white bar. The white bar indicates higher prices within 3 to 5 candles. We're above our green trend line. We're in a green volatility band. So we can trade to the upside. This would be a bullish trade setup. So you've got your line there. We've got our dot representing increases in volume. We have our squeeze firing long. We've got our directional arrow on our squeeze saying to the upside. Momentum starting to increase. It's got a green bar. So we'll have to see how it closes in 10 seconds. If it's a green bar, momentum is increasing to the upside. And you'd still be in your long trade. Your exit will be on the next print of a short signal. So there's our green bar, 10 seconds. Let's see. And that's how you do it. You just literally sit here and watch based on your time frame that you want to trade. If you wanted to trade a 15-second chart, that's you've got to have fast fingers. So here we have a movement to the downside. If it prints a purple candle, it may come to the bottom of the range. So green, let's see, 2, 1, prints the next candle. There we go. So you can see momentum starting to increase, but price is staying flat. Our squeeze may be running out of momentum. So we'll have to see where this goes. If this prints a dark green bar, now you can see it printed a go aggressive signal. So we could add to our trade. We could start looking to maybe add a second piece. You can add additional signals in. So here you had your long signal, buy calls. Our next signal here would be to sell the calls. So if this breaks the bottom of the vol band, it would give you an exit signal. And that's how it works. Literally, the way that I've tried to build my system is very much around colors. If you can, remember what the colors mean, it's easy to interpret where to go. So here, purple bar means lower prices. So we're getting the lower price. Now we need to see if this closes below this level here. If it closes below 101. So there, it told you to exit your long trade that you got in here. You exited, you're done. So you move on. And this is futures, right? So trades a little differently if you're using options or direct stock, but the printing is the same. It works on the same mechanics. So here you'd be shorting. As long as this line is red, you are going to the downside. Here's our volatility band is now shifted. So the price is coming down. This is probably where it will land up towards the end of the day. We could be down here. So this is a long way to go. And you can see it prints a lot of signals. So the shorter your time frame, the more fast your finger. It can be quite tiring. Your finger gets very tired.
All right, Chris.
Yeah, it's building a trading system for what works for people. No system is the same. So depending on the trader, you'll always have, there are people that I coach that trade differently from me because their personality, their emotional makeup, their biases are different from mine. You have to trade to your emotional makeup. You cannot copy a trader. It's so difficult to copy a trader. Very, very difficult. We're all different human beings. And most people think it's just about, but if he does this trade, I'll just do it the same way. Doesn't work like that. You have to remember your makeup and your ability to control your emotions of fear and greed are largely going to drive how profitable you are. And some people never control those demons. Those demons are always playing. So be careful. It's not easy.
No, it's the emotional side is probably something I never anticipated about.
The emotional side is 99. I would say it's 99% of your success.
Yeah.
If you can't control those emotions when you've got a position on, you're going to chop and change and this and that, and that's not going to help. You have to be controlled. So the way that I've built the trading system through the tools is to eliminate the emotional bias you may have when a signal prints. So the signals are completely unemotional. The decision to hit the key is an emotional decision. If you don't control that part, your part as a trader is to control your emotions when you're hitting the keys. Your analytics is done for, right? That's easy to take out, right? So if your signal is built in from the framework of, I just want to be rational, then your hitting the keys, controlling yourself element is something you've got to work on from a discipline perspective. But a lot of people get wrapped up in the signal rather than the discipline of the emotions. They go the other way around. And that's what causes inconsistency in performance, is when the signals are accurate, but your timing of the hitting of the keys, or I got skittish, I didn't want to lose the $50, so I landed up losing 200. That's where people go wrong.
Right.
So, it's an interesting study when you work with new traders, because new traders, especially people who've made money in other aspects of life or other avenues, people often think if they've made money before in something else that they're a good trader. And that is entirely not the case. Often I find people with a lot of money who've made it in other pursuits tend not to be good traders. They tend to be very, very emotional and over risky. They take too big a risk. They don't understand risk management. So, building a system that gives you confidence in the signal and then the discipline to hit the keys at the right time, that's how you build it.
Good, great advice, Chris. Hey guys, go over, check out Chris's products over at rogueinvesting.com/alpha. Get on his mailing list and check out his weekly webinars under the hood. Good stuff at the beginning of the week, kind of get you tuned into the market. So, and he likes to take questions. So bring your questions.
Yeah, please come and join and give me questions, man. It's hard talking to myself.
All right.
All right, buddy. I'll talk to you next week.
Absolutely, Chris. Take care, buddy.
Take care. See you soon. Cheers, guys.